Amazon says its drones will fly 1 million packages this year. That's about 80 minutes of work for its ground network. After the bell today, Citi's blowout quarter, IBM's growth cliff, Apple's EU climb-down, and a rocket JV tapping the bond market. Let's start with Amazon and its splashy drone announcement Wednesday. Amazon.com, ticker Amazon, said Prime Air will serve nearly 500 U.S. cities, a huge jump from the handful today. The company is targeting roughly 1 million drone deliveries across the United States in 2026, up sharply from last year. But Amazon's existing U.S. ground delivery network moves roughly that same volume every 80 minutes. So the honest scale isn't the city count that led the headline, it's a rounding error on the ground business Amazon already runs. The drone build-out is a multi-year infrastructure bet, not a 2026 revenue story for Amazon shareholders. For anyone modeling last-mile economics or retail logistics disruption, that ratio, not the city count, is the number to anchor to. Now to Citigroup. After years of transformation costs, the results finally arrived. Second quarter revenue reached $24.766 billion, up 14% year-on-year, according to Citi's results release. Net income jumped 45% to $5.831 billion for the quarter. Diluted earnings per share climbed 61% to $3.15, a huge print by any bank benchmark. Investment banking revenue rose 44%, catching the deal flow wave that has been running through Wall Street this quarter. Return on tangible common equity hit 13%, a threshold Citi has been chasing for years and rarely cleared. The backdrop: Citi has absorbed roughly $3 billion a year in transformation costs across multiple years to get here. This is what those costs were supposed to buy: operating leverage finally showing up on the tape after years of skepticism. For Korean bank investors watching their own cost-out programs, Citi is now the benchmark for a transformation trade paying off. IBM's second quarter cut the other way, growth is narrowing fast. Second quarter revenue rose just 1.1% to $17.162 billion, a big slowdown for a company that had been re-accelerating. That's a sharp step down from the 9.5% year-on-year gain Big Blue posted in the first quarter. The Q1 figure is derived from the filing's 6-month total of $33.079 billion against $31.519 billion in the prior year period. Net income fell as the Z17 mainframe cycle laps its launch quarters and the hardware tailwind fades. Growth is now visibly concentrated in just 2 software lines, everything else is flat or shrinking. The stock had been priced for a durable growth re-acceleration. The thesis just weakened materially with this print. The read across for hardware refresh cycles: tailwinds fade faster than consensus models assume. Apple settled its Digital Markets Act fight with the European Commission, and it cost them. The App Store in-app purchase commission drops from 30% to 26%, effective October 1, 2026, per Apple's own announcement. The per-install core technology fee, introduced by Apple in early 2024, is being scrapped entirely. It's replaced by a flat 5% core technology commission on apps distributed outside the App Store, a much simpler structure. The European Commission welcomed the changes after months of tense negotiations. This is the first major DMA settlement. It sets the template for how Brussels squeezes platform take rates going forward. For Korean app developers with EU exposure, the effective take rate on that revenue just got measurably better. Quick hit: United Launch Alliance tripled its bond offering this week. The Boeing-Lockheed 50/50 joint venture closed $1.5 billion on August 18, tripling the $500 million it initially sought. The offering came in 4 tranches spanning 3 to 10-year maturities, arranged by U.S. Bancorp, Mizuho, and Wells Fargo. The cash matters because Vulcan Centaur has been grounded since a Q1 2026 booster anomaly. That derailed ULA's plan for 18 to 22 launches this year, a real cash squeeze on the JV. What to watch at tomorrow's open: bank sector rotation after Citi's print, IBM's software peers, and any Kospi read-through to Korean logistics names. That's LineVest Daily. Full analysis lives at LineVestNews.com. And the morning brief hits your inbox free every day at LineVestNews.com.